The Little Book That Makes You Rich by Louis Navellier. Welcome to YourBookSummary.com. Getting the basics right is crucial in the stock market. There are 8 key factors to consider when evaluating a stock. 1. Upward earnings revision. When analysts increase their earnings estimates for a company, it's a positive sign. 2. Earnings surprises. If a company's reported earnings are significantly different from what analysts expected, it can impact the stock price. 3. Growth in sales. Companies that are able to increase their sales are seen as potential growth opportunities. 4. Operating margins. Companies that can increase their profits without sacrificing margins are doing something right. 5. Free cash flow. Companies need to have enough cash flow after expenses to sustain and grow their business. 6. Earnings growth. Consistent growth in earnings is a good indicator of a successful company. 7. Earnings momentum. Companies with increasing earnings growth rates are usually preferred by growth investors. 8. Return on equity, ROE. This ratio shows how well a company is utilizing its shareholders' equity to generate returns. It's important to consider all these factors when analyzing a stock, as each one plays a crucial role in understanding a company's financial health and potential for growth. I hope you found the information about The Little Book That Makes You Rich by Louis Navellier. If you're interested in learning more about the book, stay tuned for the next part of this series where we'll dive into the next section. Thanks again for watching, and I will see you in the next video.